Hello and welcome to Capital Market Live on Channels Television. I'm Willie Bong. We kick off with a visit of the U.S. Consulate to the Nigerian Exchange as the NGX, where both parties announced a decision to collaborate and boost investments and trade between Nigeria and the United States. Let's take a listen.
The work you do here at the exchange in creating transparency for Nigeria's companies and accessibility for them to both your Nigerian investors but to international investors as well is incredibly commendable. It's something that opens your markets to the world and demonstrates the excellence that is here in this center of excellence in Lagos, but in Nigeria as well. And I commend you for that and for your commitment through what has been a very difficult few years to this great work. And I'm looking forward to doing everything I can to increase trade between our two nations and increase investment from the United States here and your investment in the United States, because I believe deeply that trade and investment is the thing that will be the foundation for our continued partnership.
And that was the U.S. Consul General, Mr. Will Stevens, at the NGX closing gong ceremony yesterday. And I have joining me to discuss this event and more is Abimbola Adeoye, Senior Investment Broker, Parthian Securities Limited. It's good to have you here, Abimbola.
Thanks for having me.
Now, Abimbola, we saw that I don't know what I'll call it, historic visit by the U.S. Consulate, and what he said that he was going to work with the NGX to create more transparency and make Nigerian companies more accessible to international investors. How much of a boost do you think this statement or this collaboration will give to foreign portfolio investments, considering the FX scarcity situation we're currently facing in the country?
All right, thanks for having me once again. So we saw the courtesy visit from the U.S. Consulate to the NGX yesterday, where they talked about the collaboration between the Nigeria and the U.S. in terms of facilitating investment and trade in Nigeria. So we've seen that the relationship between the U.S. and Nigeria has been mutually benefit, where so many sectors in the economy has actually benefited from this. The agricultural sector, the energy sector, and the rest. So we've seen that sort of partnership between U.S. and Nigeria. However, the major reason why we think this is really important, is in a time like this where we're seeing lower investments from the foreign participants in our equities market. So this kind of visitation sort of gives some reassurance about their commitments towards strengthening the relationship between the two countries. And it's also instilled confidence into market participants. So do we think that this is actually going to boost, some trade or investment in the short run? Maybe not. There are a lot of factors. There are a lot of factors that are considered before any investor brings investment into frontiers markets or even any markets generally. So one factor we have to look at is the FX prices. So we all know that Nigeria has been battling with this, FX instability, and a lot of foreign investors are not able to access they're not able to access FX when they want to repatriate their funds. So things like this would actually scare investors away from our markets. And we think that if the monetary authority is not able to, if they don't come up with policies that would attract foreign flows into this market, in the short run, this visitation will not translate to any relationship or any investment into our economy. But maybe in the medium to long term, there will be some sort of investment or trade. There'll be some investment or trade. So that's what we think. Yeah, but in the short run, we might not really see so much from this visitation.
Those are the concerns that actually worry many Nigerians or many investors, because FX repatriation is a very serious matter in terms of having to, wanting to move your money back, and then you not having access, or there's scarcity of FX. Liquidity in the system is really tight. But we are seeing data also from the NGX showing that these foreign transactions, total foreign transactions, have decreased by 4.95% to about $66 million in August. Now we saw $69 million transacted in July. Now, can you shed more light on these numbers? Break it down for us to know how these numbers matter, and this decrease, and how much it's going to impact the NGX if they keep decreasing.
Okay, so in July, we saw foreign participation in the market. It was around 29.33%, but in August, it declined to about 22.76%. Just to provide a bit of context, so market has done 1.8 trillion so far this year, and foreign participation is about just 15.9%. This is quite low compared to what we used to see before in 2018, 2019, where we saw foreign participants dominate our market. They were trading about 70% of the market. 15.9% is ridiculously, it's quite low. Another thing that we have seen is that there's been a net outflow from our market. We're not seeing fresh flows. We're not seeing fresh funds into the equities market. All we're seeing is recycled flows, in that foreign investors sell a particular sector to invest in another. And because of this FX crisis, I will continue to talk about this, or we will continue to talk about this FX crisis. Because of it, a lot of foreign investors are not coming into our market. So what they are doing is they're looking for avenue to move out money from the equities market, or even from the from the economy. And the way they are doing that is by buying Ethel and Seplat. So because of the fungible nature of Ethel and Seplat, it's been they're dual listed on London Stock Exchange as well. So the inflows we're seeing is through buying Ethel and Seplat, such that they are able to take these shares to the London Stock Exchange, to convert into FX, to convert into dollars or pounds, as it were. So what we're seeing is there is a decline in participation. So that data is actually very correct.
Interesting point you made there about Ethel and Seplat. We did see some block buys for Ethel, and we see the share price keep going up. And then we're wondering what's happening with Ethel, what's happening. But I think now you've shed more light, and many people out there will probably understand what's really going on behind Seplat, the moves in Seplat and Ethel, Africa. Now we see, as you rightly mentioned, domestic investors have definitely dominated transactions at the NGX. Now they're participating more. And speaking of the performance of the NGX, the trading ended positive this week. Surprise, or it was expected, because we traded only 4 days and we've had a bearish momentum for some time now.
Okay, so I must say that I was surprised seeing the NGX close positive yesterday. So even in the bear market, you would see some marginal increase, or dead cat bounce in the market. What we saw was market lost. So it was the 4 trading days. Market lost 2 times out of the 4 trading sessions, and we have seen the market lost five weeks consecutively before this gain that was recorded yesterday. And the drivers were mostly banking stocks, where there is some sort of renewed interest in that space. Industrial sector as well. Boa Cement was the major driver, and insurance sector increased by 1.72%, while the other sectors didn't really perform as much. So oil and gas and consumer sectors actually declined. And in terms of turnover, so we're beginning to see funds into the market. We're beginning to see investors come into the market because of renewed interest. Because of renewed interest, the turnover was about 11.9 billion compared to 8 billion that was recorded in the previous week. So yeah, we're seeing bargain hunting activities in the market right now. the active stocks for the week was GTCO and FDNH. So hopefully this momentum will be sustained. I mean, we like to see that if the market is upbeat.
Yeah, talking about active stocks, you mentioned now, which stocks stood out for investors this week? You mentioned GTCO, but are there other stocks that moved the market this week?
Yes, there were other stocks that moved the market. So Honeywell Flour Mill, we saw bargain hunting activities in that. It gained about 8.84%. Bois Cement, which I mentioned earlier, there was also some bit of bargain hunting. It opened the week at 52 and closed at 56.5. So there was 8.65% appreciation in the price. GTCO as well. So GTCO, before yesterday, GTCO has been trading at 1680, which is like the 52-week low. There's been a lot of intense sell pressure on GTCO, and I think it's because of the lack of confidence in GTCO. So what happened yesterday was we saw a reduced sell pressure, and we started to see bargain hunters come into the market just to buy GTCO at this current level where it was, which was why we saw that 5.29% increase. And the other stocks that also that lost, UACN, we saw a bit of profit-taking activities in that. It lost about 12.2%. You know, Geregu as well. Geregu listed recently. They listed their stock at shares at 100 by listing, so listing by introduction. That was earlier this month. And they also released their results, 9-month results, yesterday. But from the result that we saw, the result, it wasn't all that impressive. So we saw a decline in revenue by 28%. Last year, they declared turnover of 54 billion, but from what they released yesterday, we saw a turnover of 39 billion. I mean, it just leaves us to wonder what exactly is going on with this company. But from the explanation they gave, it was because of the gas supply constraints that they witnessed in Q3. So Shell is their primary supplier of gas, and Shell declared force majeure on one of their gas pipelines, so which invariably affected Geregu, and it affected their turnover. So another thing that worried us about that worried us about the financial statement that was released was the finance cost. It increased significantly by 689%. What's going on there? So they explained that it was the interest expense. So apparently they borrowed some loans, and they issued some medium-term bonds, which they are now having to pay interest expense on. So that's actually add to their profitability. So they declared a profit of about 10 billion, and but it was still lower compared to what they declared last year. So 11.4%.
Abimbola, that is that we'll have time to probably discuss that at length. You know when you talked of the force majeure by Shell there, I think it's probably the Trans-Niger pipeline that was shut down. But I'm just thinking about other matters now. You spoke of borrowing as well, and recently, just this week, the Minister of Finance, Mrs. Zainab Ahmed, hinted at a possible debt restructuring at the IMF, on the sidelines of the IMF annual meetings. Can you explain this, and what is the expected impact on equities and especially bonds?
All right. So what debt restructuring means is it's a kind of renegotiation of the terms and conditions of a loan. So take, for instance, Nigeria has borrowed money from the international markets and the local markets, and Nigeria is somewhat.
Abimbola, can you just give me the impact? A quick impact on bonds? What would this mean for bonds? In just quick one, very quickly before we go on a break.
Right. So for the bonds, it means that it will be priced at a ridiculous rate. So there's going to be a significant impact in the fixed income space, where international markets is viewing us as a country that is unable to pay its debt. So there is that negative impact, and also a downgrade in our ratings. We might likely see that. Again, borrowings, it will be very difficult to go into the international market to borrow, because because they'll be asking for risk premium, like, so that is going to affect our debt, our cost of borrowing. So that is the impact that we'll be seeing in the fixed income market.
That's a sad outlook for the Nigerian bonds market, especially international market there. Bimbola Dioye, Senior Investment Broker, Parthian Securities Limited. Many thanks for your time on the program.
Thank you.
We'll take a quick break now. When we return, a look at investing and profiting in a bear market. Do stay with us. This is Capital Markets.